SOFI update on the 5th, trading close today. Thought I'd make a video. I haven't made a video in about a week now because I feel like I'm just repeating myself in every video and not really bringing any new charting information to light, and so it's kind of redundant to just make the same video over and over. But I'll make an update here just to give an idea of where we're at in the chart and what I think is most likely. I think it's most likely at this point that we still could be in a leading diagonal, but because we had the good earnings right here, and that's where we got this pop. But this whole move down here is looking more and more like we're just in a channel upward. So A, B, C, D. We get a pop to E probably sometime in earnings. This was on the 20th. This was on the 4th. So 2.5 months later is about mid-October. So we'd be looking at $9 by mid-October. And if you look, we never actually filled this gap. So maybe this gap gets filled here going into earnings. Earnings are probably what, in early November. So maybe not going into earnings. Maybe this will stretch out to earnings. So maybe we go all the way to earnings, we go to $9, hit the top of this channel, and then based on that, we would expect a move down after that, probably lower based on that way of looking at it, because A, B, C, D, E, it always goes the opposite way of that. So based on the chart like that, that's pretty bullish for the next couple of months, and I personally have been selling puts, and I bought some June $5 calls for next year. I'm like, those are going to be easily make money, you would think. Anything goes to the stock, though. You never know what's going to happen in the market, but I feel pretty good. I'm averaging down. I'm just doing 5 contracts at a time. So that's kind of what I'm thinking for the overall movement on the stock. Sure, we could do a leading diagonal like I talked about in the past videos, where this is actually a first wave, second wave, and we get a third wave higher. But with the market, it's just looking overall like this makes more sense. And one of the things we got to look at are the yields. The 10-year yield, and then also the dollar. If you watch my SPY video on both of those, I have these both being in a B pattern right now. So if you look at the daily chart, I have this as being ABCA, and I have this as a B wave. Hasn't broke the top of this, and it could actually go higher than that and still be a B wave, but I feel like it's getting close to topping out. And so I would be looking for a move down here to 1.9 is the 50% retracement. If that happens, the yields usually move with the dollar. So if we look at the dollar, it's the same situation. We have the dollar sitting here looking like it's in a B wave on the daily chart. Let me go to the daily. So we have A, and then this looks like an ABC for a B wave. And actually, pretty crazy that I've been paying attention to this today, but I drew this yesterday, and I said if it goes past the 1.23 fib, then that means the expanded flat is probably not going to play out. It's probably just going to keep on going higher. And look where it topped out at, 110.27, and it's back down to 109.82. So it's looking good so far for an expanded flat, and that would take us down to this right here for a C wave, to 104.64 all the way to 103.56. And so if the yields come down and the dollar comes down, then yeah, I'd feel really comfortable saying that we're probably going to go to 9 by earnings, either before earnings or after earnings, and we get a bounce in the overall market, and that would lead to us going higher. So this pattern would probably play out pretty well, or you get a leading diagonal. So really, it just comes down to the overall market at this point, and this chart. It's just like going over the same thing over and over every day. If I was going to pick a bottom for this 5th wave, we would have already hit it, because between the 50 and 0.61 fibs, we bottomed at 562. That would be my target right in here. So anywhere from 554 to 579. So we basically, according to this, we bottomed. We're ready to go up higher. Just depends on the overall market. I do have the overall market going a little bit lower short term to either 380 if it's a, I pull this up. If we're in a 5-wave move, that would be the most bearish scenario. Then I would have us going to 380 short term. I have it all marked out here. So I have 380 short term for a 5-wave move, bounce to 405 or so, but then get a move down here to like 340. So that'd be the most bearish scenario. I also have us as A, B up here to 408, and then a C wave down here, maybe to the low 360s, and then we go higher. So we want this ABC pattern to play out, and we want yields to come down, and we want the dollar to come down. If that all works out, we should be able to move higher into earnings over the next couple of months. But yeah, I haven't put out an update that much because the chart is pretty redundant and hasn't really even done anything besides just trickle down over the last week or so. So I'll put out another update whenever we get a significant move, but expect a move to at least hopefully till $9 going into earnings. We deserve it after all these great earnings, and it should play out. And from there, we'll figure out what comes next. But right now, just expect we're pretty much bottomed and we're ready to go higher. So we'll see. If there's a significant move this week, I'll put out another update. But if not, good luck trading this week, and I'll talk to you soon.